Why is business credit important? Well, there's three things that lenders specifically look at regarding your business credit that determine your ability to get capital. And I want to dive into those three things right now. But there's also three other things that business credit will do for you that are crucial to you building a thriving business. These are things that your competitors don't know about that actually give you an unfair advantage once you learn them today. And at the end of this training, I'm actually going to get you access to my proven blueprint so you can successfully build business credit. Look, it's the same blueprint that I've used to help over 60,000 entrepreneurs successfully build business credit. And you're going to get it all right now during this training. We got a lot to cover, so let's dive in. So look, business credit's very important for three main reasons when it comes to you getting capital for your business. If you're trying to get money through credit issuers or lenders, including loans, credit lines, and credit cards, well, business credit has vital importance in three different areas. Number one is business credit quality determines if you'll be approved or denied for credit and financing. So think of it like this. As a consumer, imagine trying to go get a home loan or a car loan or credit cards or other loans for your business when you have no personal credit or even bad personal credit. Well, that's exactly what a lot of entrepreneurs do. They're trying to go out and get loans and credit lines without having an established business credit profile and score. Now, in the business world, bureaus like Equifax and Experian will actually give you a failing business credit score just because you have no credit. That's right. I mean, you can actually have horrible business credit because you have no credit. So you've got to make sure that you're establishing business credit because this determines if you're going to get approved or denied when it comes to credit and financing. Remember, your credit profile and score is what shows lenders your ability to pay. So if your business has no credit profile, no credit score, then there's no proof, there's no evidence that the business will pay back its debts. And this point, what happens is lenders typically default to you. This is when they require personal credit checks, when they require personal guarantees, because your business doesn't have a history of paying its bills, so they rely on your personal credit history instead. And look, the problem there is that even if you have good personal credit, it puts unnecessary inquiries on your credit report and ruins your ability to get other kind of financing. So we've got to make sure that we're building business credit because it is what is used to determine our ability to get approved for credit and financing. Just by building business credit, we will get significantly more funding approvals for our business. And that brings me to number two thing that lenders are looking at when it comes to our business credit profiles and scores. And that is how much money we should actually be given. Look, have you ever applied for a loan, a credit line, or a credit card and not gotten as much money as you'd like to get approved for? Well, business credit's probably the culprit for that because the business credit reporting agencies actually have a recommendation of credit that they give to credit issuers and lenders, meaning the bureaus are actually telling lenders and credit issuers how much money you should be lent. So if you're not getting as much as you'd like, well, then your business credit profiles are probably not well established. Now, in helping 60,000 plus entrepreneurs build business credit, here's what I've learned. The more accounts you add to a business credit profile, the higher the recommendation of credit is. So just by building your business credit and adding more and more accounts that report, that factor alone will get you significantly higher approvals when it comes to business financing. And that brings me to factor number three that lenders are using business credit reports for, and this is to determine the actual rates and terms you should be approved for. Look, if you want the longest terms and the lowest rates, it really comes down to your business credit quality. As a matter of fact, lenders and credit issuers in the consumer world and business world are using business credit scores to determine the interest rates you should be given. So if you're getting high interest cash advances, well, business credit is probably the culprit. What we want to do is get term loans and SBA loans, low interest, long-term loans. But we just cannot do this. It's impossible to do if we don't have business credit established. So by building business credit, we get more approvals. We get higher approval amounts, and we get better terms on the approvals we're actually given. But there's three other factors you should really know about what business credit can do for you, why you should have business credit. And the one factor is that it actually separates your consumer and your commercial credit. Business credit is the only way legally in the United States that you can have two credit reports. One as an individual linked to your social, one for your business that's linked to your EIN. And the nice thing about this separation is that when you build a business credit profile and score, you have more and more credit issuers and lenders that don't require personal credit checks. They're making the approval decision based on business credit quality, not your consumer credit quality. And you have more and more credit issuers and lenders that are giving you money without personal guarantees. This means you are not personally liable for your business debts. And this happens when your business can actually stand on its own. And the only way for your business to actually be able to stand on its own when it comes to borrowing is to separate this consumer and commercial credit. Second thing you should know about is that business credit is public. This is publicly accessible information. It is your reputation. Your prospects, your clients, potential investors, lenders, credit issuers, insurance companies, they all have access to your business credit reports. They don't need your permission to look at your reports. As a matter of fact, if you go to Dun & Bradstreet's website right now, you'll find on their website that the first question they ask you is, do you want credit reports for your business or somebody else's? So you need to make sure that you control business credit because it's your public-facing reputation. If anybody out here wants to know how credible your company is, how your company pays its bills, they're going to look at your business credit reports and scores. So you need to build business credit to make sure that you have the public reputation that you want to have. And thirdly, and potentially most importantly, business credit gives your business the ability to fund itself. Here's what I mean by that. Look, with other kind of funding, you need revenue, you need cash flow, you need collateral, you need all these other things to get approved. But business credit will actually get you access to very high limit revolving accounts that you can use to fund your business where you don't need any of that. You can get business credit cards with $20, $30, $40, $50,000 at Visa, MasterCard, even almost every major retailer, even including auto financing, cards at gas stations. You can get all of this without personal guarantees, without personal liability, and without personal credit checks. Meaning just because you build a business credit profile and score, the building of that profile score itself is the asset you can use to get money. You don't need all these other things that you need to actually get to be able to get business financing. And the benefit there is you literally are building a credit profile and then using the credit profile to get the money you need to continue to grow the business. You literally are creating a world where your business can fund itself and it doesn't need to rely on you personally. So there you have it. Those are the most important reasons on why you need business credit. Now, if you want to get business credit for your business, go to creditsuite.com/EIN. And at creditsuite.com/EIN, you'll have my blueprint on business credit building. I mean, look, this has been downloaded over 1 million times. So it is the step-by-step formula for you to successfully build business credit for your business. Hey, did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.